Hello and welcome. I'm Jeff Fitzpatrick, the Forex mentor from Courses on Forex. And over the next few minutes, I'm going to give you a bit of an insight into how I might trade on a daily basis. I actually use many different trading styles. Some are fast and furious, but this particular one, which I call the 10 minutes per day system, is for people that need to go to work and spend most of their time doing something else other than trading. The first thing I notice when I open my trading screen each day is the background color, and in this case it's mainly green. Green tells me that we are in a lower area of the recent price range, somewhere where I might want to buy rather than sell. However, towards the top of the screen I can see that the green area finishes and a white area starts. In that particular zone I want to either buy or sell depending on which opportunities arise. Also on the screen you'll see some vertical bars, red and green. These each represent a period of time. In this particular instance it's 1 hour. And a red candlestick, as they're called, says that the price is moving down in that period. A green candlestick that they're going up. There are also lots of horizontal lines, and we'll have a look at those as we move forward through this video. This slide makes the three trading zones more clear. You can see that in the top pink area, the price has been high. It's somewhere where we'd want to sell rather than buy. Similarly at the bottom, once again it's green, so an area we might want to buy in. And you can see now why in the middle area, I'm generally probably prepared to do both. Once I've decided whether I'm going to buy or sell, the next big decision is how much am I going to put into the trade? How much of my money am I going to invest in this? And I use a special spreadsheet for this, which you would get as part of the course that we provide. And you can see a big blue arrow pointing to the figure £2.20. That's saying that in theory I should use no more than about £2.20 on my trades. However, I generally would round this up because £2.20 is quite a small amount in terms of the trading that I'm doing, and I would take it to 3. And that means for each tiny subdivision of movement in the price, up or down, I'll gain or lose £3. So it's a very important figure to know what we're doing with. So back to the trading screen, and I've zoomed in a little. And here we can see that if we take it from the left-hand side where there is a vertical green line, that was the start of trading at 10 o'clock on the previous evening. And as time has moved forward, we've got some green candlesticks and then a series of red ones. So the price went up a little and then came back down. And it's heading, if you look at the right-hand scale, towards 1.53. And that's simply the exchange rate. It's 1.53 cents to the dollar. We are trading here the pound against the dollar. And I don't actually trade any other currencies. Keep things as simple as possible. On this slide, I've zoomed out a little, and we can see now some of the lines that I have in place. The first one of note is the horizontal green line. That tells me all day long the price at which the market opened on the previous evening. The two purple lines straddling that tell me that the price is moving seriously in one direction, either up or down, away from the green opening line. Then we have two red lines. These represent Jeff's lines, and they're points at which I'm likely to trade and put my trades in place. You can see on this slide there are actually a series of those red lines, each successively further away from the opening price. Of course, as we move away from the opening price, the likelihood of each of these being hit reduces. And in fact, on 70% of days, the price action will only move as far as that first red line, either above or below the green center line. At that point, it will probably, i.e. 70% chance, change direction and come back down again. That's the essence of how we trade on the 10-minute per day system. So going back to the time of day now where we've seen that things are moving along, but there's no great movement on this particular day. And I don't want to watch it all day long. So you'll see at the upper red line, I've set something called a sell limit order. And at the lower red line, a buy limit order. These are simply instructions to my computer to tell it, if we get to either of those price points, please put a sell or a buy trade on, because I'm not going to be here to watch it. Time's moving on. It's 4 o'clock in the afternoon on the 8th of April still, 2013. The price is moving towards the bottom of the two red lines, but it's not there yet by a long way. And therefore, all we're doing is just waiting and watching, or at least waiting and having dinner, or doing something else useful. As time moves on, and we're now at 10:30, we're into a new trading day, so the lines have moved around a little. They're going to reflect the new opening price, which is at 10 o'clock each evening. That's from Sunday through to Thursday night. The market is closed on Saturdays and Sundays. However, I decided to leave my limit will be in a reasonable position to trade. However, as we'll see in the next slide, that's not what happened. What happened was the price moved in an upward direction and hit the first of the red lines. And the computer then put in a sell trade on my behalf. What we want to happen now is for the price to fall so that we can get out of it. And I've instructed the computer to let the price fall all the way down to the bottom area where the big blue arrow is, to the opening price of the day, and said, if we get back there, please take that profit for me and close the trade. However, we're now on the 9th of April, it's 10:30 p.m, and the trade hasn't got that far down. So it's in profit, but it hasn't made as much profit as I wanted it to. So I've got two choices. I can either close the trade and start again, or I can simply wait. And in this case, I'm going to just wait and see what happens. By the next morning, 7 o'clock, before everyone goes off to work, the profit is still there. The trade is still getting nowhere near the level of profit that I want to take from it. And so I decide to just take the profit and to start the process again. And that's typical of the 10 minutes per day trading system. It makes a reasonable profit very easily with very little input over a day or two. Thank you for listening.